Hey traders, welcome back to my channel. My name is Desmond Samuel and I am back with you another episode of our weekly Forex Forecast. Hey traders, welcome back to my channel. My name is Desmond Samuel and I am back with you another episode of our weekly Forex Forecast. Now to kick things off here, we have the euro dollar here and we started to see some collapse post FOMC. We started to see that euro dollar collapse that I spoke about earlier in a previous episode, and right now as things stand we are actually pointing to the downside. And quite frankly, I don't want to be I don't want to be ahead of myself. And quite frankly, I don't want to be ahead of myself, but as things and quite frankly, I don't want to be ahead of myself, but as things look here, we could actually be collapsing to the downside post FOMC, that is, going into Q1 2025. All right. So without any waste of time, now let's see what this looks like now post. So as things stand here, we could actually be collapsing to the downside post Q1. So as things look now, we could actually be collapsing to the downside in the year 2025. So as things look now, we could actually. So as things stand, so as it stands right now, we could actually be collapsing to the downside. Falling through into Q1, 2025, and then we could actually be continuing the 2021-2022 market collapse, as you can see, like so. So judging from the monthly time frame, this is exactly how things look. We have actually been collapsing for the past couple of years now, and we came on here to give in a monthly time frame sort of a double top, as you can see, like so, and followed by a weekly time frame double top inside of here. So, and this is an impulsive move, and by now you ought to understand. I mean, for those of you guys who have been watching me for a while, by the way, thank you so much for taking me to 1,900 subscribers. I'm sincerely grateful. So by now you ought to understand that after an impulsive move like so, like an impulsive stretch, a drop like this comes a correction. So this is the correction that has been happening, I think, right from 2023 up until this point here, and we are actually starting to see the end of this, range, and then we are actually starting to see the breakout, which could actually be, epic. All right. So so it is no news that this is actually a Fibonacci play. Actually, if you parade it from your swing high to swing low, you can see how it looks here, and this is exactly where the market is inside. It has been playing inside of this supply level, which is inside of the 0.618 and the 0.5 region. And as things stand here, we are actually starting to break out of the range, because like you don't know, the market moves three ways. Yeah, so we are either moving in an upward trajectory. So the market moved three ways. Yeah, we are either so the market moves three ways. Yeah, we are either moving in the upward trajectory, or so the market moves three ways. Yeah, we are either moving. So the market moves three ways. Yeah, we are either moving in the upward trajectory or in downward trajectory. That is, we are actually moving bullish or bearish. We're actually going up or down or sideways. And in this case, we've been going sideways for quite some time until this breakout that is currently happening right around here, like so. So if you look closely, this is more or less going to be a continuation of this impulsive drop here, because the Fibonacci move is practically four moves here. So we have it's practically four moves. So you have A, B, C, and then finish up at D here. So there's a very high tendency that this guy could continue collapsing all the way to this green bar right here post, some few pips past parity. All right, so now scaling down to the weekly time frame, this is how things look on a weekly time frame perspective. Now we are actually starting to, although we are still seated on this major level here, which happens to be a very solid magnet for price in the past, ideally we should actually collapse further, but we won't just go ahead to execute trades on this guy. Now you need to understand that moving into next week, we have the Christmas holidays coming up, then we have the end of year holidays coming up, so you may not necessarily see that much volatility. But as things stand here, this is starting to break down to the downside, and kid you not, we need to see just one more weekly engulfing candle. All right, so one more weekly bearish engulfing candle break further down below here, it would significantly expose this move here, and then I'll be back here to let you guys know how you can go about capitalizing on this, how you can go about scaling down to your 1 hour time frame, the 4 hour time frames. I'm talking your 30 minutes time frame, so you can go out and then go in, scale in, and then execute the trade, and then trade in the direction of the overall flow. Because at the end of the day, what you really want to do is understand the flow of the river. Where is market headed to long term? Then you can just go on to the lower time frames and then execute in that direction. That is how we trade. That's I mean, at least that's how I trade from my experience. Is it has been the most profitable and the most stress-free way of trading so far. So moving on to the next pair, now we have the pound sterling. And the pound sterling, in our previous episode, I actually spoke to you guys. I said two things could actually happen. Is either we come on here and then we use this formation here for a supply level and then collapse further, so that on the way back up we can come in and then use it as a pullback. And quite frankly, it is looking like we may actually collapse further and then now come in here for a pullback. So more so now come here. So it is looking like we could actually collapse further and then come in here, then use this as a some sort of resistance or support level, or rather supply level to actually go about. So it is looking like we could actually collapse further and then come in and use this level as some form of a supply level to actually sell further. Yeah. So what do I need to look out for, or what do you need to look out for? Is very simple. This is still balanced on this green bar here. Ideally, should allow this guy collapse further. Yeah. Allow the market collapse further to this blue bar. At least let's see what the movement looks like. If it is enticing enough, then we can actually look for we can scale down to a 1 hour time frame and the 4 hours time frame, and then look for a decent pullback and then ride this guy further down. Now, and should this guy collapse past this blue bar, should the pound sterling collapse past this blue bar, we have about 1,000 pips to go. If I'm not mistaken, we have 1,700 pips to go. So okay, so should we actually break past this blue bar here? We could actually be collapsing to the tune of 1,700 pips, if I'm not mistaken. Yep. So we have 1,700 pips up for catch, up for grabs, if you do actually break below this blue bar here. And in the event that doesn't happen, trust me, I'll be here. I mean, this is a weekly series. I'll be here to let you guys know what I'm going on and how you can actually go about and in the event that doesn't happen, trust me, I'll be here yet again to let you guys know what going. I mean, I'm here fully with you guys. I go nowhere, guys. Trust me. So I'll be here to let you guys know what going and then how you can actually go about adjusting yourself to the current change. So the next part on my list now is gold. XAUUSD has also been showing some signs of weakness. So the next pair on my list now is gold. XAUUSD has just been showing some. So the next pair on my list now is gold. XAUUSD has just been showing some signs of weakness on the weekly time frame. This is starting to form something like a double top here, and I do not expect this guy to just continue going up. It might actually collapse further to 2,500 or 2,450 region, somewhere around here, or somewhere around here. So the next pair on my list now is gold. I do not actually expect this guy to continue going higher indefinitely without any sort of pullback whatsoever. As you can see here, we had an impulsive move, correction, impulsive move. This is just going to be a correction for us to go higher. All right, so now in this case here, I have two levels marked out carefully, although the second level isn't quite marked out here. So I have the first level being this 2,500 region, which is a rounded figure, and then we have this other one at 2,900 per se, which is also a rounded figure. All right. Now, ideally, I favor the 2,500 region for the bounce and then continuation to the upside. All right, it's very simple. Okay, so as you can see right here, we had like an engulfing bounce off of here. Now, mind you, this is the weekly time frame, so we had like an engulfing candle bounce off of here, a green engulfing candle on the weekly time frame bounce off of here. So this goes to show how solid this level is. This goes to show how solid this level is. Potentially could be used as a demand level when the market gets back here. So as you can see, the market is also coming in for that touch of the trend line, and by now you also know that the third touch of the trend line always does a trick in trading. So this is the first touch, second touch. This is most likely be the third touch, and then we could actually reverse from here. All right. So now, peradventure that this doesn't happen, because I can see a lower high formation here from this high. This is looking like a lower high. So peradventure that this does not capitalize, or rather this does not peradventure that this does not happen, because I can see a lower high formation here. This is a high, then this is a lower high, significantly lower high from here. We could actually drip further down, and that now brings us to my second level of potential demand level, which is somewhere around the 2,900 region. However, I am very confident of the fact that we could actually reverse around 2,500 region, and then we could actually be targeting my long-term target, which happens to be $3,000 per ounce for gold. Now back to the S&P 500. So the S&P is also very bullish. It's one of the pairs I've been looking at for quite some time now, and I'm very confident. Now back to the S&P. The S&P 500 is that pair that I've been looking at for quite some time. I'm very confident that this guy has what it takes to blow through 6,400 basis points. This is very apparent. I don't have any other thing to say about the S&P. I think the graph, the chart, or so the next pair on my list now is the S&P 500. The S&P has been showing signs of bullishness for a very long time, and I need you guys to understand one thing, that the S&P is ever bullish. If by chance you come across any bearish trend, it's just a pullback like this. This is just a pullback. Now mind you, this is the weekly time frame, so it may look small, but by the time you get onto your 4-hour time frame or the daily time frame, is a whole trend itself. So this is just a pullback, a pullback here, pullback. Ideally, this S&P 500 has all it takes to blow through 6,400 basis points, which is this green bar right here. All right. So I see no reason as to why that would not happen. I really bank on this move. In fact, this probably the move I'm going to be using to end the year, or start Q1. So this is a very decent setup right here, because once you get on to the daily time frame, you can see how things look in a more detailed format here. So we had already created this demand level somewhere around 5,700 basis points, somewhere around here. And if you go ahead and use a Fibonacci tool from this swing low to swing high, you can see that the market is in fact headed in that trajectory. So I see no reason as to why the market will not bounce off of here. So my target for this pullback would be, so if you're the type that loves to sell, that is you're the counter trend trader, where you're actually looking to short this guy here, your ideal take profit target should be 5,700 basis points, because right from here we could actually be blowing through 6,400 basis points. I see no reason as to why that wouldn't happen without any iota of doubt. I'm very confident that S&P is headed to 6,400 basis points. Q4 2020 to 2024, like the next panel on my list is the Alright guys, so the next pair on my list is the DAX index, the German 30, and for some time I've been highlighting this guy to the upside. And as you can see here, we came in here to put in some form of a head and shoulders pattern here. This inverse head and shoulders pattern, this is a head, shoulder, and then this was the neckline that got broken somewhere around here. Okay, and now not only did it get broken, but we had like a solid demand level form somewhere around here. So this is everything is just setting up nicely for. So everything is just setting up nicely for the final push to 21,000 basis points for the DAX index. So I see no reason as to why that would not happen. In fact, this is well on the way of happening. We are literally en route to 21,000 basis points. However, you also need to understand that the market doesn't move in a linear format. There will be waves, there will be pullbacks. These pullbacks occur, These pullbacks occur so you and I can have a chance, to add into our positions or to place the trade. All right, so the direction is clear and precise. We're headed to 21,000 basis points. However, before we head there, we have to pull back here, get some more momentum, get some more orders before actually rally all the way to 21,000 basis point, which is our prime target. All right, so I think I'm just going to talk about Nasdaq. And then we round this up. Okay, so the next pair on the list now is Nas 100, and I have been waiting for this pullback for quite some time to happen, and it is currently happening. So this is exactly where I'm waiting for Nasdaq. All right, so you guys must. I think I'm gonna come up with a video. I'll teach you guys how to use Fibonacci because I've gotten lots of questions. I've gotten lots of comments about how to use Fibonacci. I'm gonna teach you guys that. All right, so Fibonacci here has literally told us where this guy is coming into. 19,800 basis points is the pullback range. So we need to wait for this guy to come into 19,800 basis points. Then from here we could actually slap some more buy orders on this guy and then carry it all the way to 22,900 basis point thereabouts. But this blew back here because market moves from one level to the next level. So your business as a trader is to do one thing: identify the direction, then come in, mark your levels. Then now in between here and here, there's going to be trading opportunities because the market once again is not linear. It will give you wave patterns to pull back for you to actually have decent entry opportunities. All right, so the next pair now is let's talk about US 30. So the next pair on So the next pair on our list now is the US 30, the Dow Jones Index, and as you can see, the market is even a lot faster than the rest of the pairs, the rest of the indices. The market is even coming into 41,400 basis point a lot quicker. So now what we need to do is very, very simple. You see the way the market, accumulated itself here. You see the way. So what we need to do now is very, very simple. You see where the market has moved here. You saw this engulfing pattern here. So we need to come in and wait for the market to balance out nicely around this 41,400 basis points. Once we see a decent 4-hour engulfing candle, listen closely. 4-hour engulfing candle is what we want to see. A decent 4-hour engulfing candle after the bounce off of here. Then we can now go ahead and execute this guy. My prime target remains for the 7,000. My prime target remains 47,000 basis points for the US 30. I see no reason as to why this would not happen. We are actually en route. Everything points north. I see there's nothing pointing to the downside as far as I'm concerned. As far as trend is concerned, as far as top-down analysis is concerned, as far as technical analysis is concerned, this guy is headed higher. All right, so this is even coming in for a third touch here, similar to Nasdaq, similar to the S&P, similar to the Dow Jones Index. The third touch always was G. Then also similar to gold. All right, so what we need to see is just that final third touch here that's gonna really take things through the roof is what we are actually waiting for here. So for the 41,500 basis points is where this guy is coming to balance out. Once you see that decent bounce off of here, then we can now go ahead and execute this guy confidently and hold to our direction, to our take profit, which is around 47,000 basis points. So we're gonna talk about the Alright guys, so the next pair on the list now is the yen index. We are back en route to the downside. Alright guys, so next pair on the list now is the yen index. We are back and route to the downside all the way to 688, region here, which I have been highlighting for quite some time. By the way, I collapsed this guy right from 2023 January, and then this is exactly where we are at the moment. So I mean, as things look here, we are actually pointing south. I see no reason as to why this guy will not collapse all the way to 688, especially after this fake out here comes a continuation in the opposite direction. By now you also have done this. Alright, so this is clear. We have clear space all the way to 6. We have clear space all the they come guy. We have clear space to 688 region somewhere around this green bar, like so. So come Q1 I will be back here on this chart to let you guys know wagwan. So on this chart here we have space all the way to 688 region. So all we need to do is just allow this market just melt all the way back down, because the market is heavy on the monthly time frame, the weekly time frame, and even the daily time frame. With the south, the whole flow is headed down, so it is quite heavy. So we are actually collapsing further to 688 region, which has been our prime target, and subsequently we could actually even collapse further to past 688 to 626 region. All right. So now what does this mean for the rest of the yen pairs? It means that for USDJPY we are headed higher, for pound yen we are headed higher, for euro yen we are headed higher, which for Aussie yen we are actually headed higher. So I'll be here to let you guys know what what to do, and when to actually go about executing your trades. All right. So to round this up here, we have the dollar index. To draw this to a close, we have the dollar index. All right, so to round this off here, we have the dollar index, the XY, which is actually starting to point to the upside here, which is around the 115 region, which has been a long term target, which was the monthly high from here. Now this was the monthly high, the yearly high actually from 2022. So this was the high 1115. So as things stand here, the market will always, if the market is going to move from point A to point B, will leave certain clues in between, and in this case this is the clue it has left. So what you need to do is wait for the market to give it that leg down to this yellow bar and then continue higher. So I see no reason as to why we should not continue all the way to 115. Now peradventure, and if for any reason, because as I've done this like so, now peradventure, and if for any reason the market fails with that, because I can plot my trend lines from now peradventure, and if for any reason the market fails to continue higher, because I have actually done this. Now peradventure, and if for any reason the market fails to go higher, because I've actually plotted my trend lines and I can see that we have broken out of this downward trend as so, and we are actually back in tune with the overall trend, which is bullish. All right. So this demand level was created around 102, which happens to be at the break of this trend line here. So you can see that what we need to see is market just pull back into this 104 or 104 region. So what we need to see is just the market needs to pull back into this 104 region, and then we actually continue to 115. All right. So by the way, if you found value in this video so far, be sure to leave a like and comment and turn on. Now that brings us to the end of this episode of our weekly Forex forecast. I remain Desmond Samuel. Leave a like and comment and turn on the bell icon as you subscribe to my channel, like and share the video. Now please leave and that brings us to the end of this episode of our weekly Forex forecast. I'm yours truly, Desmond Samuel. Leave a like and comment, turn on the bell icon as you subscribe, and I'll see you guys in the next episode. Peace out and Merry Christmas in advance, guys.